Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 21st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind, everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, though, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. Today's the day we've been looking for all of this economic data. Remember, it is PMI, which is Purchasing Managers Index. That is it's a survey of the purchasing managers of a business, and they are buying raw materials to bring into the manufacturing process and then produce new goods, right? So this is a gauge of the prices they are paying for their outlook. This is not Purchasing Managers Index, not necessarily the prices altogether. It is basically the inventory they are buying to produce their product. Okay, so it's a gauge as to how sure they are the economy is doing. Okay, so it's more of an index of that. Anything below 50 is contraction. Anything above 50 is expansion in the economy. So let's move over across the pond and take a look at a couple of CPI numbers first, though. We got German final CPI coming in at negative 0.6%, which is in line with, negative 0.8%, which is in line with expectations at negative 0.8%. The French final CPI came in at negative 4%, or negative 0.4%, expected to be at negative 0.5%, so slightly better than expected there. Now the PMI numbers for the French flash services PMI, Purchasing Managers Index, came in at 49.8, expected to be 48.6. It is better than expected, but like I said, anything below 50 is contraction. 3 in a row is a bad sign, and this is the second one for some of these. And then we got French final manufacturing PMI came in 51.4. That's good. It's above expansion because France and Germany are the leading manufacturing sections or countries of the European Union. So French above 50, a good thing. But flip over to the flash manufacturing PMI for Germany. It came in at 47.8, was expected to be 49.7. Last month's number, remember, came in below 50 at 49.7 also. So that's 2 in a row on a manufacturing number. I'm not as concerned so much about a service PMI number, but the manufacturing ones, those are the ones that are producing are good. So if they see the economy slowing down, they're going to pull back on their purchasing, and that goes below 50. It's because they aren't expecting anybody to be buying, right? Not a good thing going forward. This is why these numbers are great, because they are very forward-looking. The purchasing manager is forward-looking. These numbers become forward-looking rather than in hindsight, right? So then we got final German flash PMI. Services PMI, came in at 55.1, expected to be 52.8, better than expected there. That's good. And then I think that's it for the PMI numbers across the pond. Move back over here to the United States. We got core durable goods orders. Came in at 0.1%, expected to be 0.3%. A bit of a pullback there, not good. Durable goods orders altogether came in at 1.2%, expected to be 1.6%, so still lower than expected there. Philly Fed manufacturing. Remember, we've been seeing a couple of these wane a little bit. We've gotten some pretty wild swings in these numbers, really, to be quite honest. They haven't been very consistent across the board. But today we got Philly Fed coming in at negative 4.1, expected to be a positive 14.1, you guys. So a big miss on the Philly Fed. Not too good. I would expect this to start weighing on the overall equities across the board with these data points. And then we got, unemployment claims, a little bit lower than expected at 216,000, expected to be 236,000. And then our flash manufacturing PMI came in at 53.7. This isn't as widely looked at here in the United States as we look at for the European region. That's their major number. Here in the United States, ours is ISM, Institute for Supply Management. This is just the flash number to give you a little bit of a heads up as to what's going on there. And then the flash PMI for the service sector came in at 56.2, expected to be 54.4. Nice beat there. Then we get on to existing home sales. Now with the rising interest rates, we've been seeing some of these existing home sales numbers not really do too great. Again, we're missing. Came in at 4.94 million units. Expected to be 5.01 million units. So just a slight miss by about 50,000 units or so. And then we got natural gas storages coming in at 170, a drawdown of 177 billion cubic feet, expected to be a drawdown of 165 billion cubic feet. So it's slightly higher than expected there. And we should be getting the crude oil inventories right now. So they're slightly in negative territory. And we did. It's a build of 3.7 million barrels, expected to be a build of 2.9 million barrels. So one of the first times we've seen these crude oil numbers have a higher than expected, no, that's not true. We've been getting these higher than expected builds, creating inventory. I was talking myself into believing this was a bigger drawdown than expected, but it's not. It's actually a bigger build than expected by almost 1 million barrels. So a continuation of that glut in crude oil. And that's about it for the economic data today. I don't even think we have anything really going on later on today. No, we got a Bank of Canada Fed governors, couple Fed governors speaking over there. I don't think that's enough to really move the market, but crude oil starting to lose a little steam, going up and testing those 60s yesterday. I mean, we really kind of blasted off yesterday after I got done with this daily market commentary. Was not expecting that necessarily. I mean, it's not out of the realm that they're going to push it too far, and testing that value area low and the Fibonacci extensions, all of that. Not really surprising, but I do still expect it to be in the mid to lower 50s, especially if we continue to see these builds in crude oil. It's just lack of demand and people are not moving around as much. All right, gold. Yesterday I added some gold futures, actually with the gold GLD. I'll talk about that when it was kind of at that high. I was talking about it in the daily market commentary. Basically, as soon as I got done with the daily market commentary, I think I did it early, like very close to the open of the day, because I had a lot of things going on yesterday. Before I walked away from my office, I think it was 8:01, I sold some GLD. So we'll talk about that when we pull up the charts that I've been trading around. Now, bonds making a big move to the downside, over basically a point down on the day right now. Big move to the downside. A lot of these Fed governors with the meeting minutes and stuff like that, we're talking about the market really needing to take a break, that global slowdowns were happening. They didn't want to put us into a recession, which they might have already done. I've only been talking about this for 8-9 months now, that they should stop raising interest rates because of the economic data. The fact that they missed out on all of that and the market's trying to tell them is beyond me. But today we've got the bonds moving down. As the bonds move down, that indicates more of a rising interest rate environment. I think that this is nothing more than the fact that we are going to be stuck in a range here, and we really they aren't going to lower interest rates anytime soon, and they aren't necessarily going to raise them. So we're kind of stuck in the mud here with bonds. And then we look at the VIX. VIX is moving higher today with the equities looking pretty weak. There's just not a lot of strength. I shouldn't say weak, but there's just not a lot of strength. There's not a lot of follow through. It just doesn't feel like they want to rally today, especially with the market action we've got in the last couple of days starting to feel a little toppy, that I've talked about several times. We keep piercing through this, but sooner or later when you start getting these, it's really feeling toppy and it will end up breaking. We're above the value area high here. You've heard me talk about being in and around that value area or the point of control. Basically what this market is telling us, we've literally in the last month or so gone to the extremes on the downside, which was way overdone. And now we're starting to really test the upper boundaries of the extremes again. The market is signaling the economy is doing very well, but it's not. And we're not out of the woods yet on this whole economic picture. It seems like it is very tentative, to be, for lack of a better word, really. All right, let's look at the NASDAQ. NASDAQ in negative territory as well. It's settling on this 38 Fibonacci extension and acting as support as one would expect. Its 200-day moving average really isn't giving us a whole lot of support resistance. It's really peeling through that. It's more along the lines of these Fibonacci levels. But if we break below this 38, again, we're going to go back down to that point of control, which is what I flip through every morning. I go through all my charts, my watch list, and look at the charts. And I'm looking for setups and stuff like that to give me a directional assumption. And everything's kind of falling into place right now where, other than that one point where we really extended to the downside down here, I was expecting this to kind of create this kind of pattern. Now we've kind of pierced to the bottom, came up and tested this resistance again, third time through. Usually it didn't go through that time. Doesn't look like we're trying this time very hard. I think we're going to roll back over again. All right, E-mini S&P, as you can see, overnight inventory really tried to get long, trying to push this market higher, but we started getting economic data points coming out of Europe. I even tweeted something out. I was like, we got the economic data for Europe. Doesn't look good, with a little GIF, and waiting for the U.S. economic data, and it didn't give us any solace in thinking that the economy is doing very well. And you can see we've kind of extended to the downside. I think we might see a little bit of a dead cat bounce here as they try and shake out some of these weak hands on this short-term move, some of the day traders. But again, don't really see this market having a blast off to the upside. All right, let's talk about some trades that I've done. I'm looking to get out of McDonald's. I've had orders in here for a couple of days now, and if you guys remember, I actually started putting this trade in on the 20th or the 19th when we were looking at this to try and get out of it. But it was a quick move, a couple of days in a row where it was like very quickly and looking like I was going to get hit. I am very close right now. I'm probably less than 50 cents away from the upside on this trade from being filled. And what I did was went into the April contract and I had bought the 190 calls in there, so expecting it to go up and test the highs. But remember, we just wanted a couple quick moves here to get that market moving in my direction, get those deltas. I paid 75 cents for it, 76 cents for it, looking to double my money, which would be around $1.60 right now. Because it's happened so fast, I'm looking to get out at $1.53 for a random odd number on the upside. But I did went for $1.53 on the upside, slightly less from a double on this trade. But because I've only been in it for a couple of days, it really I can't beat that. I've crushed the probabilities on this, and I can't really justify staying in this trade longer when I've already achieved very close to 50% of my max profit potential on this trade. So that's what I'm trying to look for in that trade. Sold it, trying to get out for just slightly better than $1.50. Okay, so that's what we're looking to do at McDonald's. I can't find the exact date I did that right now. I'm trying to think and run this webinar, and I can't find the thing right now. I'm stumbling there. And then the other things, a couple of things that we're doing is advanced option strategies. Now I'm looking at doing the put ratio spread today, so check that one out. It's basically you take a long put spread. We're adding a little bit more risk to it. We're going to pay for that entire spread, and I'll show you how to set that up and get you out to the one standard deviation move for your risk. And it's a really great strategy to check out, especially for high implied volatility. So we're doing that webinar today. I'm just prepping myself for it early. That's why that was up there. Now GLD, I talked about this, that I put in a trade with GLD, and that was for a bearish market assumption. And I went in and did the March, sold the 129 calls in there for, sorry, I need my glasses, I think. They were for 69 cents. Right now they're trading around 31 cents. So I probably should look to get out of these. Probably will do that right after I get off of here. I'm going to put in a bid for those GLD. It wasn't that good earlier on today. I was looking at it, and I think it was the GLD. I did it for 69 cents, and I think they were trading around 42, but it looks like it's getting a lot better. So I'm going to probably put in an order to get out of these GLD. Slightly better than 50% of max profit since I'm already there. Squeeze that out and trying to work that for the better part of the day and then get out. TWLO, covered this yesterday, and I talked about it in the daily market commentary. I talked about it in the daily market commentary that I was going to get out of this, but was working in order yesterday to get out. I talked about it, and then I tweeted it out once I got out. So you guys should be following me on Twitter. If you guys are especially following along, to make sure you guys have a heads up before something like this would happen where you get that market move. I've beaten the probabilities. I'm looking to get out, right? And then you see this happen. Now you're starting to think, well, gee, why didn't I get out? Well, that's why you follow those rules. Stay mechanical, because I could have had to wait another 5, 6, 10 days in order for it to get back up to that level. And in that meantime, I could be trading around using that margin elsewhere, not worrying about it and kicking myself in the pants for it for several days going forward. So in this, if you guys remember, TWLO, I went into the May and did the 120 calls I bought for $9.20. So looking to increase by about 50% of my max profit, right? So not necessarily a double on this. That would be right around $18, $19. But basically a 50% increase in that puts me right around 12 something, right? So half of 9 is $4, $13, right? Well, I got out at $12.30 is where I sold those out. Like I said, I did this on the 19th, got out on the 20th. That 50%, almost a 50% increase in my profit overnight. Who can beat that, right? I'm not going to run with that, you guys. I'm going to get out of that for that kind of profit. I'm not going to ride this out into the sunset for, retirement. I'm not going to try and retire on this TWLO trade. I'm just trying to make these short market quick moves, get in and get out when I've beaten the probabilities. I realize that, and I can move forward. That's what will allow you guys to sleep at night. That's what's going to allow you to make it to the next level of trading where you're confident. You're not worrying about this stuff constantly. You're not micromanaging it. You get to that point, you will be able to be confident and comfortable with all of your trades. So check it out. Pro Trader Strategies. Today, we're going to be doing the put ratio spread. I'm going to show you how to set this up to increase your probabilities of success. I'm not that guy that's just going to show you, hey, yeah, you buy one put, you go further out of the money and you sell two. You're done. Go. No, I go into specific rules, when and where this is appropriate, how you set it up, how much you got to collect for this trade, and what your risk rewards are with this, how we can get to a 1 standard deviation move before we start having to worry about losing money. All of those things will be covered in today's webinar, so go to protraderstrategies.com and sign up for that. Sorry, it went really long today, but got a lot of things to talk about. If you can't take that, take it easy.